The other big news, I think, and it's come in waves over the weekend, is Tesla. Tesla.
Yes.
I saw that there was a fire in Philadelphia. Actually, it was a Susquehanna employee who actually was in the car and was driving the car. The car goes on fire. People see it. Someone in a home sees a car driving on fire, calls the fire department. The car stops. Eventually, he has to get out by kicking the door open because the system failed.
Right.
He couldn't get out. He gets out, and you can see pictures online how the car is completely destroyed. Battery. One of these things where the battery just keeps on lighting up until they got to douse with water for 90 minutes. But that was just the initial story. Then there was there's essentially the former CEO of Ford coming out talking again, saying the same thing. We said it last week. I thought was interesting. Last week we were talking about how, maybe the week before, how he had said that Tesla was great because they were builders of the industry, but now literally every manufacturer is talking about EV and coming out with their new EV car. So you have all this massive competition. That's just on that part. But there was an interesting article that I can highlight here, which was this is significant news here. A hard problem. Elon Musk laments full self-driving woes 5 years into charging customers for the non-existent feature. So we're going to connect the dots here, because this is, I think, the reason why the stock is down today. Okay. People can look at the car. People can look at the former CEO making a comment. Zero Hedge has got another article about Tesla asking the Chinese government to squash some of these news stories that have come out, negative news stories. That's something else. Those are all articles. When Elon Musk is basically saying we're having trouble here figuring out this problem, this full self-driving problem, and he makes a tweet saying, let's see here. This is his tweet. Haha, FSD 9 beta shipping soon, I swear. Generalized self-driving is a hard problem as it requires solving a large part of real-world AI. Didn't expect it to be so hard, but the difficulty is obvious in retrospect. Nothing has more degree of freedom than reality. Okay, but here's the big problem. Okay, and I want to make sure that we are all on the same page here, because we've talked about this, and it was part of the thesis as to why the stock could get down to let's call it 500, right? And the article that we showed was the robotaxi article by the shorts. And this was printed in April 1st, 2021. It's something that the shorts have been talking about for years. Okay, this is I think part of what David Einhorn has been looking at, why he's wanted to look at the Fremont factory. He wanted to know where the cars were going, who was taking those cars, delivery, whatnot. But this story, okay, starts having some legs here, okay? Because if you remember, part of this story, and you should put this link in for people to see if they haven't. Part of this story was it's very interesting. They had this lease back agreements where essentially, they were leasing any cars that they weren't selling. They were just sending it somewhere to have this lease back where they would buy the cars back. But what they were doing was they were actually saying, when you drive a car off the lot, the car historically goes down in value by like 30%, right? Okay, so we know that. So that's been since the day of time. What Tesla came up with was this way to use accounting to say, well, the expected resale value of the car is not going to be lower than it is today. It's actually going to be higher. For the first time in history, you're going to buy a car today and you're going to be able to sell it at a higher price 5 years down the line. And
that's crazy.
The question was why? Because I was thinking, okay, these people are smart people. Why would they do that? And they were leaning on what? They were leaning on the full self-driving, which basically said, you're going to use your car for the next couple of years, and then you're going to be able to actually have your car work for you while you sleep, being a taxi, robotaxi around, because it's self-driving. And that's how we're going to get to being able to say, no, these things are going to be worth more, and people aren't going to want their money back. We're going to sell these cars, and we're not going to have to take them back. Well, now that he's telling you that it's not the case, that full self-driving is not going to be able to make you money, then this expected resale value should be where it historically has been, which it historically should look like this, right? And back then they were taking big write-offs because this is what was happening. The accountants came in and the accountants made it look like this so that they didn't have to do that. Well,
Right.
if FSD doesn't work, it's not going to be a reality anytime soon. Then this all becomes something that they'd have to write off. Essentially, what it's saying is that there could be billions of dollars of write-offs coming up in the next, call it 18 months. But every time they've sent these things out with this type of accounting, all of that has to be taken out now because they're going to have to actually pay up. Okay. And people are going to give back these cars. And that's going to cause a problem. Now, the flip side, the positive to all of this is that Tesla got over the hump. They were struggling when this was coming out in 2018, 19, 20. You see what the stock was. The stock was going down. They would have trouble raising capital. There were problems. Now, the stock had gone all the way up to 800. The stock's trading at about $650 billion in market cap. They have cash that could actually withstand this potential buyback. So this potential buyback obligation on their leases. Nonetheless, it's still a problem. It's still something that the market might be sniffing out here, and I think that's why you're seeing pressure. I think if you read this article and you connect the dots of what we've been saying a while back, you see the shorts. Let's take a look at the shorts here. The shorts are probably looking at buying these downsides. So you're seeing they're a little bit more active today. I've been seeing the 600s a little bit more active down here as the stock is going down. This is a scenario where, the shorts start setting up, right? He makes that comment over the weekend. Now the shorts are setting up for them to blast out something tomorrow, or maybe make that connection that we just made and make it at the front, on the front page saying, hey, what about all the accounting? And remember, if you look at that article, all the accountants, some senior level accountants left, after doing this. So they did this. It's almost like the way it works. If somebody forces you to do it, you as the accountant don't want to do it. You do it. You know that there's going to be problems come 3 or 4 years. So what do? You do it. You wait a little bit, and then you just get out and you say, okay, I'm leaving. So it's an interesting reread here with this new development where it's coming out of his mouth saying this is a problem. So the shorts, you can see them coming here. There's a lot more put buying in the 30s, 40s, 50s. And I do suspect that if you get a bigger push tomorrow with that statement, plus the robotaxi report that I just showed you, and put those together, I think, it potentially could cause the stock to come off a little bit. Like I said, there's several articles today on Tesla. This one is disguised amongst all of them, but I think this one is the most important. And you look at something like, we've been looking at this stock here and the setup, and this is a big level, 633, 627. If you can get a follow through tomorrow, and you get something that goes from here to here, you can easily see 600. Get right in there. Either whether it gets to 600, 575 and bounces back, this story gains a little bit of speed, and people start asking questions as to how many cars are in that sort of accounting structure, and what is the actual number where Tesla's going to have to pony up that dollar amount. It becomes a little bit of a problem. If it's $1 billion, $2 billion, not really that much of a problem. It's basically they committed this. I don't want to call it fraud, but they committed what some people would say is fraud. And then they actually got the stock up. They were able to sell shares. People who bought shares might, if the stock goes on, might actually have a class action lawsuit to say, I didn't want to buy those shares. It was based on this. That might have been fraud. You can have a case for that too. So that's where things get into a little bit of trouble. And how much money are they responsible to? Is the balance sheet responsible for the amount of cars that they've actually done this lease back? But you get through this, and this is a dangerous spot. You get through this on the way down, you can hit 575, 550 again. So I'm concerned about this. I think to play, if you want a cheap shot, and I think you're going to find out the next day or two, I wouldn't put this is something where you're connecting the dots, and at times it takes a little bit longer to connect the dots, but you're looking at something where the stock could be down and pretty significantly, I think, on this. So, and you get the gamma that's in a lot of these where they start positioning themselves. But if this has any pullback to like 660 today, 662, 665, you can start buying some of these 640s as a shot. If you have a shot here is it's like it's not like you can spend $100. A shot here is $700 to $1,000, but you don't want it to be a full position. You want, this is a very quick, fast type of play where if this type of story gains speed, you could see it actually coming off. The stock has dropped below this. It's 6 days in a row holding 675-ish, looking to get here, and then it drops here quickly to 650. This becomes a dangerous area again right here for Tesla. You're looking at this right here as well. Again, it's pointing right to that 627, 633. So I would look at the stock thinking towards 630, and then what happens there? Breaks, you could see a sharp move towards sub 600, where maybe by Friday it comes back to the 600 level. But this story, I think, will have some legs, and I think the shorts are going to be pushing this as a big deal over the course of the next, let's call it 2-3 weeks. Okay.
Yeah, fair enough. Good story.
Let's look at it quickly. Let's mark out things, because I think let's show you the stock down 3.5%, $23. Let's look at our call spread, right?
Yeah.
The July call spread, the 650s are 26.5. The 700s are 6.5. So 6.5 times 2 is $13. $13 off of 26.5 is 13.5. I told you last week I thought it'd be around here, 12.5 to $15. I think I said somewhere here. I think it was last Friday. I think it was actually closer to $16, $17 because they really crushed these 700s, like we said, going into the July 4th weekend. So you got the 650s now trading 13, win it for $1. The 175 that we paid for these, this is still against us a little bit here. The 580s, okay, so it's about, I don't even have the 520s there, but we have this a little bit still against us. We paid $1.75. That might come into play still, so that one is one to watch. I'm actually thinking, wow, this is actually we might have gotten this two ways here, where this one is this one's obviously up 13 times already, and it got up to 17 on Friday too. So it's gone from $1 to $17, and this 580 it's actually had a pay to get out. So you leave it there, the 580, 520, and that's actually going to come into play again here. I believe this is 2 weeks. I believe that could come into play. So this is something to watch in a development, but I think in Tesla, there's a chance here to potentially connect the dots and have the market connect the dots for us here. Okay.
Yeah. Better sooner than later. Definitely.
Yeah. I think once it's out, then it's going to make its move in. Although it's already had a nice move, but the SPYs are trying to hold in there. We have the market